Hello, everyone. We are going to get started. Thank you so much for coming. My name is Jeremy Martel, and I'm the Community Engagement Manager with the Cape Breton Partnership, and I'll be providing some light technical support during today's call. As you may have noticed, we're using the Zoom platform for this webinar, and what that means is that while we are doing this presentation, you do not have to worry about being seen or heard. You'll be completely private behind your computer screen. If you need to move around, if you need to stretch, if you need to grab a glass of water or so on, please go ahead and do so. We won't notice, so you won't be hurting our feelings. Because we're also using this platform, you'll have the ability throughout today's session to provide feedback and comments in the chat section that you'll see down below your screen. It's a small speech bubble, and just next to it, you'll see a Q&A button as well. If during the session at all you have any questions you'd like to ask our presenters, please feel free to ask them in the Q&A. You can type the question in, press enter, and we'll get it on our side. Because we expect fairly quite a few questions to come through today during the call, we will be trying to bunch like questions together. So if you hear your question but it's asked a little differently, that's likely because we received many of that question. We also received many questions leading up to the session when people registered. So we're very much looking forward to answering those. If you have any comments or technical issues or anything seems to be going wrong, please leave it in the chat. We'll be monitoring that so that we can make sure that we give you the best experience that we can today. With that, I am going to invite Carla Arsenault, the President and CEO of the Cape Breton Partnership, to welcome us. And Carla, you should be able to join us now. And the most used sentence of 2021, as we all know, is, Carla, you were muted.
Turn off your mute button. Good afternoon, everyone, and welcome. My name is Carla Arsenault. I'm the President and CEO of the Cape Breton Partnership. I'm honored to be here today with our partners at the BDC. Thank you to Pierre and his colleagues, Adam, Jeff, Sue, Gina, and Jean-Philippe for collaborating with us to present this webinar to you today. The Cape Breton Partnership is pleased to be here with our Nova Scotia Regional Enterprise Network partners and the Halifax Partnership to hear about the economic outlook for our region. The Nova Scotia Regional Enterprise Network partners include the Pictou County Regional Enterprise Network, Cumberland Business Connector, Truro and Colchester Partnership for Economic Prosperity, Western Regional Enterprise Network, Valley Regional Enterprise Network, the Cape Breton Regional Enterprise Network, and the Cape Breton Regional Municipality Regional Enterprise Network. This has been a challenging time for businesses across Nova Scotia, and as we continue to get back to better, I look forward to Pierre's outlook and hope you enjoy today's conversation and learn how we can continue to build our province's economy. I would now like to hand it over to Gina Gale, Vice President of the Atlantic Region at BDC. Over to you, Gina.
Good. Can you hear and see me?
We sure can.
Yes, you can. I'm good to go. Thank you, everyone, can you see me? Because it says the host has stopped my video.
And we're good.
And we're good now? Okay, good. Thank you. Anyway, thank you, everyone, for being here with us today. As Carla mentioned, my name is Gina Gale, and I'm responsible for the Atlantic region here at BDC. First of all, I'd like to step back and I'd like to acknowledge all the great work that the Cape Breton Partnership has done in helping the entrepreneurial ecosystem in the Cape Breton area, where I was born and raised, by the way. So Cape Breton, I hold that very close to my heart. Thank you, Carla, and the team for hosting and presenting today's webinar. And of course, thank you to all the partners across the province, particularly the Regional Enterprise Network, REN, for joining forces with us to make an event like this happen. So as you all know, and I won't go into a lot of detail here, but as you all know, the entrepreneurs are certainly the engine of our economy. You know, they build businesses, they create jobs, and really make a difference in our communities every single day. And it's really rewarding to certainly see that. At BDC, we support entrepreneurs by lending to them and advising businesses in all stages of their growth and really helping them propel their business forward. So today's presentation is called The Path to Recovery 2021 Economic Outlook. Again, very timely topic, and I'm sure you're going to find it engaging and useful. Our goal today is a few things. It's one, to share the economic outlook for the recovery, share our insights and how the business's environment has changed, as we all know it now, and the advice for entrepreneurs to innovate and grow and propel their businesses forward. So with that, very pleased, we have BDC's Chief Economist Pierre Cléroux is here with us today to guide us through that. I've had the opportunity, Pierre, to hear you several times speak on various occasions, and I always benefit from his presentations, and I know you'll find it a very valuable outlook. Pierre, you're appointed Vice President of Research and our Chief Economist at BDC in 2012, and he leads a team who analyze economic data to identify businesses and sector trends impacting Canadian entrepreneurs. Over 25 years of career as an economist, and he's held many influential positions that directly impact entrepreneurs, not just within Canada, Pierre, but also abroad as well. He holds a Bachelor of Arts and a master's degree in economics from Laval University, as well as an MBA from the MIT Sloan School of Management. So without further ado, Pierre, I'll hand it over to you.
Thank you, Gina. Good afternoon, everybody. I'm just going to put my presentation on the screen. Just let me share my presentation. So one more second and I will be all set up. So the presentation today, like Gina said, it's about two parts. First, I'm going to talk about the economy, where we are, and also what we forecast for the next 2 years, both for Canada and Nova Scotia. Second, I'm going to talk about how the pandemic have changed our business environment. There's a lot of different challenges, and I'm going to talk about 5 trends that we see. So first, the Canadian economy. This is our forecast for 2021 and 2022. After a recession last year where the GDP dropped by 5%, we are expecting solid growth for 2021 and 2022, 5.2% growth this year and around 4% for next year. So very solid growth after a year of difficult economic situation. This is where we are in terms of jobs. The Canadian economy lost about 3 million jobs during the first part of the pandemic. And the recovery has been quite rapid, quite fast. But as you can see from this graph, each time we had a second wave, we had restrictions on our economy. And as a result, the level of job went down. So today, we are almost back to the pre-crisis level in terms of the number of jobs. It's about, we are at 99%, which is about 100,000 jobs missing in Canada. But the recovery has been quite different from one sector to another. You can see on this graph that in general in Canada, we are at 99% level of job we had before the crisis. But some sectors have been performing quite well. For example, professional and technical services are at 110%. So there's thousands more jobs in this sector than before the pandemic. But if you look at the bottom of the graph, you can see that accommodation and food services is only at 87%. As you know, there's a lot more restriction on this sector. Our border is now open, but was closed for most of the time, and it's open only for people who are fully vaccinated. So the restrictions on this sector is responsible for the fact that we haven't recuperated all the job loss in that sector. The good news is in terms of vaccination, we're doing very well. 68% of all Canadians has been vaccinated. Compared to other developed economies, we are actually number 1. If we compare ourselves with the United States, we're doing much better. You often see in the media 80 or 85%. So the difference here, it's to be able to compare Canada with other countries, we have to take the entire population. So the number here is 68% of all Canadians, not only the people over 12 years old, has been vaccinated. So we are doing quite well, and this is going to be important for the 4th wave that it's already on the way. So we have a poll, we have a question for you that we're going to put on the screen before I talk about the data on Nova Scotia. So we invite you to answer to this question. How would you rate your level of confidence in the economy of Nova Scotia? And we give you 4 choices: very positive, somewhat negative, and very negative. So we would like to see how confident you are today, and I'm going to show you after that where we are in terms of the recovery in Nova Scotia. So we'll give you some time, about a few 20 to 30 seconds to respond. Hopefully that we'll see. I'm looking forward to see what is your confidence level right now in terms of the economy. So we must be seeing the result pretty quickly now, very soon. Are the results ready? Yes, I think they are coming. So there's a 10% who said they're very positive, 80% somewhat positive. So that's a big number. 90% are saying they are positive, only 10% are negative. Well, that's very interesting. That's very encouraging as well. So actually, this is actually very good because when we talk about where we are in terms of the result in Nova Scotia, the recovery has been actually better in Nova Scotia than in Canada. We are today, in terms of jobs, at 99.7% of the jobs. These are all the jobs lost during the pandemic. There's only 2,000 jobs missing in Nova Scotia. Again, just like in Canada, the situation is quite different from one sector to another. But if you look at the top of the graph, you can see many sectors of the economy has been performing well. For example, in the professional services, there's actually 10,000 more jobs today than before the pandemic. In construction, there's 1,000 more jobs in Nova Scotia than before the pandemic. So some sectors, the recovery has been very strong. If you look at the bottom of the graph, well, you see that it's not true for every sector. Just like in Canada, accommodation and food services is at 71%. There's actually 10,000 jobs missing in that sector. And I'm going to talk about why this is the case. Information, culture, and recreation is mostly recreation because of the restrictions on these events. There's 5,000 jobs missing. So it's a bit the same picture than for the Canadian economy, but actually the recovery is better in Nova Scotia, where we are at 100%. Like I said, is almost we're almost full to the level of job before the pandemic. The reason why it's so difficult in accommodation and food services is the tourists that are missing in the province. In red here, you can see the percentage, in percentage, the international tourists that is missing. We are at minus 97%. These results are the most recent one we have. It's in May. So probably the numbers are a bit better during the summer, but not much because of the restrictions. Of course, this sector is struggling not because people don't have money or the international tourists doesn't want to come. It's because of the restriction we had on our border and the restriction we had in our restaurants. So that's explaining why this sector is lagging compared to the other sectors of the economy. So it's going to take some time. As the pandemic is improving now, we should be able to go back to the normal situation probably next summer. But other sectors are performing quite well. Constructions is doing quite well. There's about 1,000 more jobs in Nova Scotia in construction than before the pandemic. And one of the reasons is housing starts have been really performing well. As you can see from this graph, there was a decline in the second quarter of 2020, but after that, the amount of housing starts has really increased. It's actually higher than before the pandemic. Manufacturing is performing well. It's actually the level of activities is much higher today than before the pandemic. And these two sectors, which are the most important manufacturing sector in Nova Scotia, are responsible for that. Food manufacturing has been performing very well during the pandemic and also over the last few months. And plastic and rubber, this subsector is also performing well, explaining why the manufacturing sector is doing well. Finally, the export fishery has been performing quite well over the last few months. 2020 was a difficult year for fishery, as a lot of restaurants around the world were closed. We lost our export market, but over 2021 has been a good year, and the level of export today, for example, in July 2021, is actually higher than in 2019 before the pandemic. So the demand is strong, and this sector is really recovering very quickly now. So far, both economies, Nova Scotia and Canada, has been performing quite well, despite the fact of the restrictions of COVID-19. So what I'm going to talk now is the key drivers for the next 2 years. The first one is coming from Canadian on the consumer side. The graph that you see is our level of wealth for all Canadians, all the assets that we have. And as you can see, since the beginning of the pandemic, our wealth in Canada has been increasing. Why? Well, the different assets that we own has been increasing. The value of our home has increased significantly over the last 12 months. The value of our investment, the stock market, has been performing well after, a very slowdown last year. The market has been going very well, and many Canadians are benefiting from that. Our disposable income has increased thanks to many government programs, and as a result, people have been buying durable goods, which it's including their assets. So this is quite special because usually during a recession, we see assets or wealth going down. This recession, of course, is different, and in this case, Canadian wealth has been increasing. This is important because it allowed Canadians to shop, and consumption of goods has been increasing after a very significant drop during the first part of the pandemic. As you can see from this graph, the level of consumption is much higher today than before the pandemic, which is not the case for services. As you know, there's a lot of restrictions on services, not as much anymore, but during the first part of the pandemic, there was a lot of restrictions on personal services, on restaurant. There's still restriction today, and that's explaining why the level of services is still below the pre-crisis level. This situation should go back to normal as the pandemic is going away. And of course, as you know, the housing market has been performing very well, has been slowing down over the last 2 months over the home sales, but it's still much more elevated than before the pandemic. So on the consumer side, people have money in their bank account and in their pocket, and that's going to be the main driver of the growth for the next 2 years. Canadians are going to spend part of this money that they have accumulated, and this is going to stimulate the economy. On the business side, well, the good news is 73% of Canadian businesses are profitable today. And on the one who are not profitable, 22% is because of COVID-19. So this is a much better picture than we saw even 6 months ago. So businesses have been very resilient. They have been finding a way of doing businesses despite the fact that we are in a difficult situation and we still have some restrictions in some sectors of the economy. But they are doing better, but it's not easy. It's not easy to do business anymore. Prices are fluctuating. Consumer demands are fluctuating. We have shortage of labor. I'm going to talk about that a little bit later. So often it's difficult to get the supply that we need. So despite the fact that Canadian businesses are doing well, much better than last year, for example, well, they're still struggling because of the difficulties of COVID-19. Nevertheless, business investment have been back to normal after a slowdown in 2020. So this is a sign that businesses are confident, a bit like the result of our poll today. They are confident enough to invest. The last part on this is the international market. The recovery has been solid in different parts of the world, especially in the US, our #1 trade partner. The US economy has been recovering very quickly, and growth this year is going to be around 6%. Actually, the US economy is the only economy in the world which is actually already back to the pre-crisis level. So this is good for Canada because, as you know, we export a lot of products and services to the United States. And here it shows the Canadian export back to the pre-crisis level as the US economy is performing well. In Nova Scotia, our export this year increased by 21%. So the situation is almost back to the pre-crisis level. So this is explaining our optimism in terms of our forecast. We believe we're going to have solid growth this year, 5.2%, and solid growth in 2022 of about 4%. Before I talk about the trends, I want to talk about a few key indicators that we're watching. First one is interest rate. As you know, interest rates are quite low. They are at 0.25%. which kept our mortgage rate, for example, or our investment rate really, really low. We don't see interest rate to increase before another year. We believe that the Bank of Canada is going to maintain this low interest rate for at least until summer 2022. And after that, the increase should be very gradual, very, very small. So we're going to still operate in the low interest rate environment. There's a lot of talk about the inflation. And it's true that the inflation is much higher than used to be. So on this graph, I show you inflation every month. Today, we are at 3.7%, which is much higher than what we used to. If you look in 2019, we were close to 2%. So, and we are much higher than what the Bank of Canada would like to see. So should we be worried about this? Well, we believe we're still confident. We believe that this is a temporary phenomenon. And inflation is going to go back to I would say normal, to around 2% in the next few months. There's two reasons why we believe it's temporary. The first one is what we call the base effect. Inflation is calculated over a 12-month period. So for example, the number that you see, 3.7%, calculate the difference of prices between July 2021 and July 2020. If we look at the graph, we can see that July 2020, the level of price was very low. And that's part of the reason why inflation right now is high. It's because our base was low because of the pandemic. The second reason is we see a lot of increase in prices that we believe are going to be temporary. A good example of that is lumber. I don't know if you tried to buy lumber over the last 12 months, you tried to build a deck or something. You probably realize that the price of lumber have jumped during the pandemic. Actually, it was 3 times the level of pre-pandemic. But the price of lumber is coming back now to almost normal. Last year, a lot of people bought a house. Housing starts have been really exploding, so the demand for lumber has been strong. On top of it, a lot of Canadians decided to renovate their house, and so it made the situation even worse. So the supply of lumber couldn't adjust very rapidly, so the price went up. Actually, it tripled. But as the supply is adjusting to the demand and the housing market is slowing down a little bit, well, the price is coming back to almost normal. We're going to see that in many products that where the price was changed during the pandemic. Because during the pandemic, the consumer behavior changed. People couldn't travel, so they focused on something else. Lumber is a good example, but there's also other examples. Food in grocery stores is also the case. So we believe that this situation is going to go back to normal at the end of the pandemic, and inflation is going to go down. So we're not worried for now that the inflation is going to have an impact on interest rate. So we believe interest rate will continue to be low and inflation would go back to normal probably in the next 6 to 8 months. So the second part of the presentation is about trends that we are seeing. Not only we're looking at the economy, but we're also looking at the economy in the next 5 to 10 years. We're trying to understand how our business environment is changing and try to have some insights for businesses. So we have 5 trends that we believe that is changing our business environment. The first one is shortage of labor. 50% of Canadian businesses believe that it's difficult, they find it difficult to recruit people. So this is not a new phenomena, was the case before the pandemic. And at the last year, because of the slowdown in the economy, well, the situation was really improving. But now as the economy is coming back, we see that this problem is coming back as well. The reason why we have a shortage of labor is because we have an aging population in Canada. A lot of Canadians are retiring. So our pool of workers is not increasing as much as in the past. This graph illustrates that. In red, what you have is actually the level of job in Canada. As you can see, over the last 10 years, the level of job in Canada has been increasing significantly. The blue line represents our pool of workers, actually the population of Canadians between 15 and 64 years old. Over the last 10 years, as you can see, the number of jobs increased more rapidly than our pool of workers. That's the reason why unemployment rate went down before the pandemic across the country, including in Nova Scotia. And that's the reason why it's more and more difficult to find workers. What is important to understand as a business person is this is not going to go away. Unfortunately, in the next 5 years, millions of Canadians are going to retire. So it's going to be difficult for the next decade to find workers. So I'm not telling you this to discourage you or to be negative. I just want you to understand that this is a situation that you will have to face for the next 10 years. So as a business people, you have to think about how you're going to continue to grow your business in this current situation. Unfortunately, there's no magic solution, but there's a number of strategies that you can adopt. The one that we find the most efficient in terms of the research we have been doing is to invest in technology. You cannot replace every worker by technology. You cannot replace a driver that you need by your robot, at least not now, but you can replace a lot of tasks in your business by technology. So you can reduce your need of workers by investing in technology. According to our research, is the most efficient way to face this situation. But there's other strategies as well. You can also look differently at the job market. We all want to hire people that have 5 or 10 years of experience. But the reality that these people are more and more rare. So other group of the population have more difficulties to find a job. For example, young people just out of school, their level of unemployment is much higher. Yes, you have to spend more time to coach them or to train them, but this is going to be the new reality. Immigrants also have a higher level of unemployment. So often this is a good pool of workers to look at. The third strategy is maybe it's time to review your compensation package because the competition for workers is going to be more and more difficult. And also finally, our research is showing that having a formal hiring process is actually helping companies to do better than other companies. So this is the first trend that we see for the next 5 to 10 years. It's going to be difficult to recruit people, so we will have to think, we'll have to be creative about doing that. The second trend that we see is e-commerce. The graph that you see is the volume of online business in Canada since the beginning of the pandemic. If you look at January 2020, was $1.7 billion. Now we are at $3.6 billion. So almost triple. And what you see on the graph, it didn't slow down when retails reopened and when stores reopened. Canadians started to buy more online during the pandemic for obvious reasons. They got the habit of it and they liked it. So this is not a trend that is going, we're not going back to normal. We're going just to continue to accelerate. So that's an important point as well for business. You have to be online in the future if you want to be successful. The third trend that we see is more and more Canadians are working from home. And this is a new trend that is not going to disappear as well. Last year, during the pandemic, during the worst part of the pandemic, 40% of Canadians work from home. Today, we're down to 25%. So this is much better today. However, we don't believe we're going to go back to the pre-crisis level. At the end of this crisis, there's going to be more Canadians working from home than before. According to our research, 74% of Canadian business will rely on some remote work after this crisis. So businesses have realized that it's possible to have part of their staff working from home. And on the Canadian side, on the people side, well, Canadians like to work from home. 54% will not consider going to another, finding a new job or accepting a new job if it's not possible for them to work at least a few days a week from home. So the third trend that we see is the remote working from home is going to be a new balance. We're going to have a new balance. We're not going to go back to the pre-crisis level. This is a new way of working, and many Canadians want to benefit from that. The fourth trend is climate change. Climate change, of course, is not a new trend, but this is accelerating. As I'm sure you have realized, only this year, we had more and more climate events than ever before. The wave heat in BC and a number of floods across the country. This is just the beginning, as many experts are saying. What the trend that we see is we're going to have more and more pressure from consumers and also from government to reduce our carbon footprint as businesses. Our latest research that we just did a few months ago is showing that many Canadian businesses are acting now. 20% are actually measuring their carbon footprint, and they're taking a lot of actions to reduce them. Another 54%, we call them in transition, they're already reducing their waste, reducing their energy consumption, and they are doing more and more. And 26% are just at the beginning of this process. But this is a new trend. We believe that the pressure we're going to get from consumers who are more and more worried than before, and also from government policy, it's time to start to measure our footprint and to do everything we can to reduce it. Finally, the last trend might surprise you, but it's uncertainty. This is something that we see as a new normal. The pandemic is not over, and its impact is going to be with us for a while. Prices are changing very rapidly. We still have supply chain issues in many sectors of the economy. The shortage of labor is here to stay. There's a lot of uncertainty about restriction on tourism. Consumption is changing very rapidly. So unfortunately, we will have to work and operate in a more uncertain environment. So we will have to continue to work on our business, to grow our business, to invest in our business in this more uncertain environment. This is for us a new normal. We'll have to get used to that because these events are going to be with us for a while. So in conclusion, we believe that the economy is going to continue to grow at a solid pace, both in Canada and in Nova Scotia. Consumers who have increased their wealth during the pandemic are going to be the main driver of the economy. Businesses are confident and they are investing. They're going to support the growth as well. And as the world economy is improving, our export continue to grow. However, our business environment is changing. We see 5 trends that are changing our business environment. Common one is businesses are investing more in technology now than ever before. Last year in 2020, where business investment were down, actually business investment in technology did increase during the pandemic. Businesses wanted to increase their presence online. They invested to allow teleworking for many of their workers. They are also investing to face the shortage of labor. So our business environment is changing, and it's important if we want to continue to have success to realize that. Finally, it's time to take action to reduce our carbon footprint. We believe that the pressure on businesses is going just to increase. And of course, we don't need pressure. I think everybody recognizes how important it is to protect our environment. So I'm going to stop here. Hopefully this is provide you some insights, and I'm very open to your question.
Awesome. All right, guys, can you hear me? I'm having trouble with my video there.
Yes.
We certainly
We're
can.
good. Awesome. Well, good. Well, thanks for that presentation, Pierre. We'll give you a second to have a quick sip of water and maybe take a little bit of a breather there. But while we do that, I guess I'll just take the opportunity to introduce myself. I'm an account manager here at BDC, Business Development Bank of Canada. Been here for the last couple of years. I'm responsible for businesses here in Cape Breton, but it was nice to see, I was looking at the participants list there, seen a few of my colleagues, Churro, Halifax, some that were responsible for down in Yarmouth as well, so well represented. So I thought that's awesome, but also just want to take this opportunity to thank everybody to make this presentation possible. It was kind of neat how this kind of started out as a coffee shop conversation with myself and Carla and self coming together and just trying to figure out what would be appropriate with this reopening and what would be some useful, insightful information that we could provide for businesses or professionals heading into this reopening. So I guess without any further ado, what we'll do, I guess, is go into the question and answers portion of today's call. So I just obviously, first and foremost, want to encourage anybody, if you have any questions, to throw them into that Q&A portion down at the bottom. I believe it's to the right of the participants icon there. So any questions, feel free to shoot them in. But without further ado, Pierre, if you're ready for the first question, we'll start with that. So first one we had here was, where do you see the Canadian dollar going?
Well, the dollar is at 79 cents today, which is a bit higher than what we used to see the dollar at 75 cents before the pandemic. We believe the dollar will continue to be stronger for the rest of the year as the demand for our natural resources like lumber, oil and gas has been quite strong over the last 12 months. In 2022, the dollar should slow down and go back to 75 cents slowly. So we expect the dollar to continue to be strong this year, but it should go back to the, I would say, the historic average to 75 cents next year.
Awesome. Thanks, Pierre. Next question we got here. What are the lessons to be learned from this pandemic?
I think, first of all, I think businesses have been very resilient. It has been a very difficult year. Restrictions came and went. The shortage of labor, it was a very difficult situation, but a lot of Canadian businesses adjusted very well to this new reality. And we see that the second wave, the impact was not as important as businesses were able to adjust to this new reality. And the third wave, the impact was even smaller than the second wave. So the first, I think, thing that we realized is Canadian businesses were very resilient. They worked very hard to continue to operate in this difficult situation. The second thing I would say is we see that in our research is businesses who invested in technology, they performed better during the pandemic. A lot of consumer went online. So if you were able to sell online, you didn't have the same impact of the pandemic. So technology, I think in the future, hopefully it's the last pandemic, but we realize that technology makes business more flexible and it's make it easier to go through a difficult period of time.
Yeah, and I think just like to be able to face adversity, there's always lessons to be learned, I think. And obviously with the pandemic, that was a pretty big piece of adversity for businesses and professionals to be facing. And I know first and foremost for myself, when I'm meeting with businesses, it's, and like you mentioned, the resiliency, the level of resiliencies that we face after each wave continued and continued, and the impact had lessened and lessened. I think because hopefully in businesses had learned from the lessons that were taught. And I think the lessons that I heard were having a reserve of emergency funds, having a strategic plan in place that you could kind of work off of if things do go south, and also knowing your current financial position. That way, if something does go wrong, you know where you're currently standing with your business from a financial perspective and where to be kind of taking it in the near future. Yeah, no, so I guess one more thing, the questions have slowed down a little bit, but once again, like everybody here, like I know there's quite a few participants, there's 60 or 70 of us here. So I just want to encourage, if you guys had any questions regarding the reopening, where we're currently standing with our economy. Pierre, we're very fortunate to have Pierre here today. So any questions would be awesome. I guess, so another question that we had, another one just came in. Do you have any guidance on labor shortage issues?
Yeah, this is actually going to be the most important challenge for businesses in the next few years. The economy, like I said, is really coming back smoothly, but finding people is actually the most difficult part. At the end of the pandemic, the situation should improve a little bit, but the biggest problem is the fact that we have an aging population. And there's a lot of people leaving the job market because they are retiring. There's not a lot of young people entering the job market. And on top of it, immigration was almost none last year because of the pandemic. So immigration is going to restart, it's restarting now, and this should help. But this is not going to be the full solution. So there's a number of solutions. Like I said, investing in technology when you can. It's according to the research, we look at different businesses across the country. We look at how successful they are to face this issue. And we find that investing in technology is actually the #1 solution. But it's not always possible to replace your workers by technology. Another solution is to look at pools of workers that are not typically where you would look like I know, like I said, we all want to hire people with experience. It's getting more and more difficult to do that. So looking at younger people where you can train and you can coach, I think it's one of the solutions. There's also other pools of workers that have difficulties to find a job often. Immigrants have a higher unemployment rate. Older workers, people who are over 60, they often have more difficulties to find a job. People with disability as well. So it's important to look at the large pool of workers compared to what we used to do. That's another way of looking at this.
Awesome. We got a few more questions. I don't, maybe I should have said it because they're starting to flood the question pools here. But another question that just came in, with recent shipping costs increase, what can you see if that will impact online business customers? With recent shipping costs increase. Yeah, with the recent shipping costs increasing, what can you see it will impact online business customers?
Yeah, I think it's very the price of there's a shortage of containers around the world, which is kind of nobody expected that. Because of the pandemic, China is producing a lot of containers, and for a while they had to stop, and as a result, there's a strong recovery, a shortage of containers, so the price is really increasing. So we believe that in the next 6 to 8 months, it's going to go back to normal. We don't believe the price is going to stay elevated. We believe that it's going to go, as the pandemic is going away and economies are rebalancing, we believe that this phenomena is just going to go away. In terms of the online business, the only thing we see is it's a trend that is moving upward. There was a big jump at the beginning of the pandemic when people couldn't go to stores or didn't want to go to stores because of the pandemic, because of the virus, but it never slowed down. People got the habit, people saw the benefits of it. So we don't believe it's going to slow down. I think it's just going to continue to increase. That's what we see in other countries around the world. So we believe that every year, online business is going to increase by 10 to 15%. So we have to get prepared for that because like at BDC, we invest a lot to be able to serve our clients online. And I think that's the future.
That's crazy. The 10, 15%, I think that's quite significant number. It kind of leads into another question I had, and it would probably implement some sort of online store with that kind of growth. But if you were to start a business in our current economy, what industry would that be in?
Well, technology. It's the business that is growing the most right now. It was the case before the pandemic, so it's not a new phenomenon. But businesses have to invest in technology right now, and so technology provider, like businesses who are able to install technology, sell technology, they are the one who are growing the most. And this is going to be the case for the next decade. If you look just at the stock market, the businesses who are performing the most are all involved in technology in some way. So technology is the sector that is growing the most. The only thing that is limiting their growth is actually workers. There's a shortage of labor in that sector as well. Having said that, there's also other sectors that are performing well in Canada. Manufacturing has been doing very well since the pandemic. Everything related to food in Canada has been performing well. Nova Scotia is a good example of that. Nova Scotia export of fish and seafood has been really exploding over the last decade. We have a great reputation in Canada for quality. So the demand for our food, transformed food or fish, beef, seafood, all this has been performing very well. So that's another sector that will continue to do well.
Awesome. And it looks like we had someone here in the restaurant industry that relied on some beef herds and must be selling burgers. I can't make assumptions or anything like that, but it looks like a restaurant owner selling beef and obviously had some difficulties with supply chain disruptions. So do we have any sort of idea or general idea where projections are going to be heading for someone that is a buyer of beef with those supply chain?
Yeah, I don't have specific information for beef, but I can tell you what we see in terms of supply chain. First of all, to this person, you're not the only one. Supply chain disruption is everywhere in every sector, which is we were surprised by that, but that's because of the pandemic. These two phenomena. Some had difficulties to produce because they're missing workers because of the pandemic. There's also a shift in the demand. So, for example, people they don't travel as much while they might buy more beef, and that's the reason why there's a shortage or there's a disruption in this value chain. Lumber, I give this example, but that's a great example. Everybody started to renovate their house, so there was the price of lumber went up. So we believe that as the economy is going back to normal and as the pandemic is at the end, in the next 6 to 18 months, all these disruptions should go back to normal. We should be able to rebalance these sectors. Lumber is a good example where it's almost rebalanced now. So it's going to happen in the different sectors of the economy where we have disruption in the value chain.
Gotcha. And I guess we're kind of running short on time, so we'll probably have to leave it for one more. For those that haven't had their questions answered, what we could look at to do, myself and partnership had said that we could look at the questions afterward and answer those directly after this call. So sorry if we couldn't get to your call, or sorry if we couldn't get to your question there. But the last question, in the reopening, are there any skills or training needed to strengthen our workforce heading into the reopening? And I know where this is heading to, would kind of be like IT or tech skills, because this seems to be like the industry that seems to be growing, and talk about like the online stores and all that kind of stuff too.
Yeah, I agree with you. The online business is so significant now that every business needs a website. Not everybody has to sell online depending on your business model, but you need to be visible. So the ability of dealing with technology is going to be a great strength in the future. So I would say that the ability to work with technology It's probably the number one talent or experience that for training that you will need in the future.
100%. I think like for a lot of business owners or professionals, like obviously we have our own skills and expertise, and it kind of goes into the fact that not everybody's an expert in certain situations. So it's important, I think, to have those, if you want to get into IT or technology or digital adoption or stuff like that, that you're reaching out and asking the right questions to the right people and tapping into those kind of resources. And it kind of goes back into like BDC's advisory services when it comes to consulting with financial management, digital adoption, whatever that may be, and asking those proper people those right questions. And we understand whether it's business or professional, whoever that may be, they might not be the expert, but it's important to have that team of resources with you. So without any further ado, Pierre, I want to thank everybody for the call, and Pierre specifically for your time. But before we end the call, I just want to hand it off for closing remarks with Angelique LeBlanc, who's the CEO of Western Regional Enterprises Network.
Thanks very much, Adam. And as you mentioned, my name is Angelique LeBlanc. I'm CEO of the Western Regional Enterprise Network. And thanks very much to everyone for joining us today for this Pathway to Recovery session. And I hope that you found today's conversation as informative as I have. And thanks to our partners at BDC. Thank you to Pierre and his terrific team. Un grand merci. And thanks to our partners at the Nova Scotia Regional Enterprise Networks across the province. And as Adam mentioned, if any of you had questions that we didn't get to, they will be reviewed and answers will be shared in the coming days. So once again, thank you for joining us. And I look forward to a stronger economy, which can only be accomplished by having an informed outlook. So thanks, everyone. Have a great end to your day.
Bye-bye.
Merci.
Thanks, guys.